and we also welcome Pashupati Advani on the show. And so, firstly, I would like to get your view on how do you see this MPC meet? Do you expect it to be a big event? What are your expectations from the MPC meet?
I think the world wants to keep rates where they are and start pulling them down. We don't have an indication of that yet, but I think that um, I think this MPC meet will just basically say nothing and just not really guidance, but we are followers. But I think that they're not really going to change rates this time. That's my humble assumption.
That's the consensus view as well, that there's not going to be a rate change this time. I think the bigger thing to watch out for is any change to the GDP estimates, and if at all the commentary becomes a bit more hawkish or dovish, is something to watch out for. But in terms of the market, what else is happening? Well, you have names like Adani groups which are doing very well in the trading session. Adani Gas, Green, Transmission. These are the big movers in the trading session. Pashupati, do you track these names closely? And from the Adani house, is there any name that you would like to recommend as a buy?
No, I think Adani House is basically trades in its own sort of avatar, if you want to call it, and it's only the people that are sort of really close to it are fine. There's no question that with Modi ji looking like he's going to come easily in 24, that's good for the Adani Group, which is why we've seen this massive move in all their stocks this week. Plus, there seems to be some vote of confidence from some overseas parties, which has helped them get some loans in a couple of their companies and also some, obviously, equity infusions. So I think that, I personally have not really followed. I have been in and out of a couple of stocks with a little bit of profit, but obviously I should have held out for longer, because in the last 2 days, 3 days, Adani Group stocks have really been the winners in this market.
Yeah, that's the FOMO that a lot of people are actually having. Pashupati, you're not alone in that. The massive rally in the Adani group of stocks in the last 4 to 5 trading session has been nothing short of phenomenal, of course. It's the IT sector which is also holding up. You have L&T Tech, which is higher by 3.5%. Wipro is actually perking up by 3.5%. LTI Mindtree is up. Our technical experts have already given the top bets from the sector. So let me ask you, Pashupati, what's your view on IT? Is it one of the undervalued sector which is coming back into the flavor?
Well, I actually feel that I'm not as excited about IT as most other people, because I think that there are going to be changes in the sense that some of the jobs are going to be replaced with AI. The question is whether our IT is able to actually pivot and take advantage of that. I think in some cases they will take some advantage, which is why it's not going to fall off a cliff. But I do think that the business models are becoming more difficult, and a lot of jobs are going back to the countries where where the work is getting done, just as a way of protectionism, which seems to be happening all over the world. Um, taking a step back, you mentioned about the Adani stocks. I wish I didn't have a V in my name. I'd just be Adani. Then I'd be probably in the same, maybe I'd be chasing the 68 billion that Gautam Bhai has.
If wishes were horses, yeah, sure. But Pashupati, just wanted to understand whether you're scaling back on your mid and small cap exposure, because many people are getting a little tentative about, what to do with mid and small caps now.
So, I think what's happened is that there's been this huge gap up in the market over the last 3-4 days. I mean, it's, like 800-900 points on the Nifty, and, uh, 2.5 to 3,000 on the Sensex. So these have been huge moves. So I think people are waiting for a little bit of a retracement, because, all the technical guys look at the charts and say, this is a gap that's been produced. It has to get filled. So I guess it may take a little bit of time to happen, but I think that, there should be some filling. Again, one should be looking at sectors to buy. I'm still very comfortable with infrastructure, cement, steel, a little bit of pharma, because pharma also seems to be doing well. And I'm not so wild about IT. And I've missed the banking sector totally. I am actually not so great about banks, but they seem to have jumped up a lot.
But Pashupati, I guess, what one is seeing play out for the last 2 months at least is the comeback of the chemical names. Irrespective of those warnings which were handed out by large global chemical players, one is seeing a bit of a turnaround play out, both of the story on ground. And of course, that's reflecting on the stock prices as well. Do you think this is a good contra bet?
Well, the chemical industry has always been dependent on what's actually coming out of China. And I think that one has to be a little bit wary of the chemicals because China is capable of producing anything that we produce at a cheaper price. They just haven't been doing it, and they haven't been exporting as vociferously as they've done in the past, and therefore our chemical suppliers have been able to take advantage and raise price, and global prices have gone up. So that's been good for them. So I'd be a little bit, wary of being, jumping into those names. Again, going back to what the government has stated that they're going to do, they are planning to spend on infrastructure. There are two parts of it. One, it generates jobs, it drives the economy, and also it's going to finish the roads so that whatever's left, so that everything is shining before May 24 when the general elections come. And therefore, I think it's all speed in those sectors. So again, infra, cement, steel, those are the sectors that are to be in the old line traditional sectors. And I would be a little bit wary about specialty chemicals unless it's to do with construction chemicals and it's an import substitute. Aisha?
Sure, point taken. So industrials as well as infrastructure, L&T, these are the stocks that you're watching out for, Pashupati. But what about Paytm and Honasa? They are having divergent moves today. So Honasa is higher by almost 5%, a bit of a recovery. But then there was this news on Paytm wherein they have temporarily halted postpaid operations, especially the buy now, pay later services, as lending partners have become a bit more cautious. What's your view in both of these on both of these counters, Honasa and Paytm, Pashupati?
Well, the thing is that they have business models that are sticky. Obviously, they've been just lending sort of against civil reports, which tend to be a little bit slower than the actual ground reality. So yes, they are going to be slightly tighter for funds, and Paytm does have the problem of having some foreign ownership, which will actually stop the lenders from giving it to them. But the fundamental marketplace of Paytm, according to me, is strong and there. I would love to see it come down a little bit more. I was in and out of the stock out in the 700s. Maybe I'll get a chance to come again. It's close to 800 in a much higher market. So I'm actually looking at maybe taking a bite again into that stock.
Right, okay. Just marking some of the other movers in trade. Look at IRCTC. That's really seeing a breakout. About a 4% uptick is what you're seeing on the stock right now. 745 is where that stock is. There's India Mart, which has actually made a move after, I don't know, a long hiatus perhaps, 3.6% higher, at least in the top 5 liquid movers list. There's HAL, of course, which is sitting with a 6.25% move, and Chambal Fertilizers, like we just flagged off, that also is higher by about 7%. Tata Power too, a meaningful move there, 4.5% is the uptick there. Pashupati, the other debate in the market is also whether the power rally has run its course or not, and whether you now need to sort of at least move allocation to the underperformers or lags within the sector for the past year. Case in point being Tata Power.
Well, Tata Power has been an old favorite and old holding of mine, so I'm very comfortable still keeping it. I think the government power companies, when you put against Tata Power, it's not a fair chance, because I think the government has a hidden agenda of trying to divest some stock before March. Since the IPO market is also very vibrant, they want to probably try and sell some stocks, and therefore you're seeing things like HAL and all also moving because they may do some divestment there as well. So it's a combo. I mean, I would say go into good quality PSUs that are not paying such high dividends. Go into dividend paying PSUs because they're going to pay fat dividends. So I think all that, because money is needed by the government, so they're going to make sure that it declares. So these companies will get earnings and then pay out to the government, and obviously that means that buy into the OMCs as well. Those are my theories.
Pashupati, barring the one-odd movers that we've seen in a Persistent or a KPIT for the year gone by, do you see merit in looking at IT services, the big boys?
Well, as I said, I'm not particularly wild about it because I think the business model is changing. And let's see how they all react to it. There are obviously going to be some winners in the Indian IT space, those who are able to move faster or move sort of closer to sort of connecting with the customer. But, given that it's slow to get visas to the US, AI is coming. AI is going to basically be US-centric product driven. Most of these guys get their significant revenues out of the United States and parts of Northern Europe. So I think it's should I say, changing times for them. And let's see how they all turn out. The only good thing is that the rupee's been getting weaker, so that's good for their existing businesses. But and I guess will continue to go weaker as oil continues to be as high as it is. But let's see what happens in IT. I'm not as bullish as Gautam Shah on it.
Okay, not as bullish on IT as perhaps what Gautam is suggesting, but I think he's talking purely on the risk-reward basis given the underperformance. Prati, what's the view on defense? If you have, let's say, a 12-month horizon, is this the space to be in?
Well, I think that a lot of the defense are going to actually probably do FPOs or sell some stock in the market. So obviously they're trading at higher levels, and with good reason, because obviously the defense spending is part of the infrastructure. It's creating jobs, and the government is definitely putting more emphasis on spending money in that sector. So all good, and particularly if you're a PSU defense company, why not?
And that's pretty much the story which is playing out across, I guess, the power names as well and railways too. Today, of course, you're seeing that churn take place. IRCTC, like Naresh was just flagging out, has really gone nowhere in the last 1 year, and that's making a comeback, finally coming in to its yearly top of about 750 thereabouts. Let's see where it goes from here. Today, of course, the story is much around IT, Wipro, LTIM, TCS, Infosys, that's where the gains are concentrated. Of course, there's L&T, Reliance also, which are closing in the green, as is the case with ITC2, which is holding up 2.6%. Pashupati, what's going to happen to some of these FMCG plays with all the concerns around a rural recovery still at bay? What's the take on FMCG?
Well, the answer is everything can't go up at the same time. So, we've obviously got some stuff that is got to either not perform or underperform. We've seen a bit in sugar. FMCG is taking a breather. There's no question that the demographic of the country is moving towards, packaged goods that are branded. So, I think in time, it's definitely a solid part of everyone's portfolio, anyone who comes into India or anyone who's in India. So there's no reason to panic. That's for sure.